Hi everyone, it's Crypto Dantes here. So we've got a new sponsor, and we are really excited about this one. It's Macrodesiac, the man, the myth, the legend himself, David Bell. David has recently launched his weekly Macrodesiac email, which is essentially a trader's guide to macroeconomics for less than half a cup of coffee a day. If you follow him already on Twitter under the @macrodesiac_ handle, don't forget the underscore there, so that's @macrodesiac_, then you'll know already the kind of critical analysis that he brings to the table from his trading background. You'll get a weekly email covering all kinds of macroeconomic themes and topics, from the likely impact and effects of central bank and government policy statements to David's own views on the markets and trade ideas he's looking at. So if you want to sign up to his newsletter, it's £24.99 a month. That's £24, British pounds and pence, £24.99 a month, with 30 days free, and he'll soon be accepting Bitcoin. So if you're looking for a unique take on the markets, the global economy, and how it all hangs together, then sign up now. The link is in the show notes, so head on over there and you can sign up. And don't forget, we still have our other key sponsor, independent author Chris Hannon, who has penned a book that is being compared to The Hunger Games and Maze Runner, and it's called Orca Rising. That's Orca Rising, which has been nominated for the People's Book Prize. Head over to Amazon now and pick up a copy before Hollywood buys the film rights. You can't really consider yourself to be a crypto whale without having a copy of Orca Rising on your desk, can you?
Hello, this is Graham and
James from ID Theory.
And this is Crypto and Grill.
Hi everyone, it's Crypto Dantes here with Stig of the Pump. Hi Stig, how are you?
I'm good. Back in my mum's basement again.
Excellent. I know it's these ups and down trends. You get into the corner office and then you end up back in the basement. It's you need a steadier life. But it's nice to have you back. I wouldn't do this without you. So
it's been a while, hasn't it?
Well, it has. However, if you're listening back to back in the future, it's just the next episode. So let's try and stay outside of the realms of time and space conversations. But for our regular listeners, it's been a few weeks since our last session with Commissioner Hester Peirce from the SEC, and that is mainly due to holidays, but we're back now. And aside from a much-needed break, we do promise to only bring you interviews that we think will help to unravel the Bitcoin and cryptocurrency space to help you further understand and explore all of the concepts at play here in more detail. So with that in mind, we've got a couple of fascinating guests today, and it's Graham and James from ID Theory. Say hello, gents.
Hi guys.
How are you doing?
It's great
Thanks for having us on.
No, it's a pleasure. Thank you for agreeing to do this. To give the listeners context, they won't know what ID Theory is. To set the rest of the session up, do you want to just give us a 30-second background on what ID Theory is, what it stands for, and we'll take it from there.
Cool. So yeah, I mean, a 30-second sort of snapshot. ID Theory, it stands for Incentive Design Theory. And we are a thematic crypto asset investment firm focusing on decentralized networks. And what that actually means is that we raise external capital to deploy predominantly into liquid, publicly traded crypto assets according to a predefined thesis around incentive mechanisms and incentive design. The structure is most akin to a hedge fund, but we would consider ourselves as crypto native, as there are a few different elements to our strategy which we can cover in due course.
Okay, and how long has it been around? Is it a new entity, or is it something that's been around for years? And are you guys, what are your roles within ID Theory?
Okay, so we're both founding partners. We actually created the company in May of last year, and have we launched the fund that we advise in February of this year.
Okay, so you're live and operating.
Can I ask a stupid question?
We're up and running. We're in the market. Yes.
There are no stupid questions, Stig.
What does the word thematic mean?
It means that we have a theme-based thesis. So we are investing in particular areas of this ecosystem, and we can go into a lot more detail as to what those themes are and why. But it means thematic is from the word theme.
Okay.
Sounds more complicated than it actually is.
It sounds very impressive. I'm sure it will be a big success. Let's cap it there. So thank you. This was Crypto and Grill, and we'll see you
guys.
Again. Cheers. Take care. No, look. So before, look, it would be great to dig into this thematic concept a bit more in detail, and what ID theory is in real detail, and where you plan to take it over the next few years, because you're a nascent firm, you've just started. Let's give some context. James, Graham, who are you? What are your backgrounds? Do you come from a financial services background, and was this a natural progression, or is there a more complex origin story?
Well, this story starts in 1994, actually, in the Class 2P back at the RGS in Guildford. So Graham and I have known each other for 25 years. We're best friends. I was the best man at his wedding. He will be the best man at my wedding next year. So we have a deep relationship. I mean, this guy knows me better than anyone else in the world, including my mother.
Sounds a little bit weird.
She's a saint.
So just, in terms of how we got into crypto, just dialing it all the way back, I'm a scientist by training. I've got a degree in genetics and biochemistry and a master's of research in complex systems. And I've always been interested in technology. I started my own web design company when I was 16. That funded my way through uni. After uni, I went on to actually work for a startup company in the semantic web. The semantic web is actually the real Web 3.0, defined by Tim Berners-Lee himself. But in 2008, financial crisis, lost my job, lack of funding. Ended up on a building site for 4 months, and then I was slowly drawn back into science, working for a very innovative British biotech company here in London called GW Pharmaceuticals. And they made medicine from cannabis. And I started work there in the office of the chairman. Really interesting. In about 2012, I was invited to head up the discovery department. And it was my role there to go and find out new areas within which cannabis might have efficacy. And so one of the first things I did was trawl social media, try and find out what people were using cannabis to treat, where were the interesting disease areas. And that was great because it opened up all these new areas of research, commissioned a load of preclinical research in models of IBD, inflammatory bowel disease, autism and whatnot. But the other thing that happened is that these groups of people were all talking to one another, obviously cannabis being illegal, around procurement and how they could get their hands on this stuff to treat their ailments. And so that's when I first heard of Silk Road, and naturally Silk Road, the currency being used to buy these products was Bitcoin. So Bitcoin was on the radar then, but it wasn't until 2013, and it was just before my birthday, actually in April, that Bitcoin hit $100, and I was like, okay, I thought this was World of Warcraft money. What is this thing? And I just went deep, and it was immediately obvious that this was a really important invention, a transformative technology. And, I'm a researcher, and I really just started doing endless research. I think from that moment I was hooked, and up until about I quit my job at GW as a director of discovery in 2017. Up until that time, basically for 6 years I had two jobs. It was crypto research and cannabis research, so two super exciting areas.
Yeah, it's interesting. There's quite a few. As you know, this space is full of podcasts and people that have made a transition from one industry and one career into another. It's so funny that explorations into the Silk Road and accessing some kind of cannabis-based treatment that was well. Some people used it for drugs, right? But some people used it for cannabis-based treatment. I think one of our previous guests, Peter McCormack, who's got a successful podcast, What Bitcoin Did, he was saying that's his origin story. You know, his mother needed some cannabis treatment. He couldn't get access to it. He found out about Bitcoin and bought cannabis from the Silk Road there to help his mum, and then got into it much later. But yeah, that does seem to be a well-trodden path. So you're kind of doing it for all of this time in the background. I'm just curious to know, because for anybody new to the space, and predominantly our podcast is directed at relatively new people that are starting to get their heads around it and understand it in more detail. There's so much information and so much analysis out there now. There's all of these theories about how Bitcoin is the new base money of the world, that it could replace all fiat currencies, that it's the importance of it is really well understood now. What was it like back in 2011, 12, 13 when you were first discovering it? You said you were a researcher, but was there much written about all of this then, or was it still in its kind of price discovery and this could all be a scam and a failure concept phase?
Yeah, I mean, people were kind of scared that this wasn't a real thing, I guess. Look, there wasn't the noise that there is now. Now it's almost there's an insurmountable amount of information that we're being fed, and trying to filter out the rubbish and really kind of latch onto the valuable stuff is difficult. There was only really one decent podcast back then. I remember it well. Let's Talk Bitcoin. Epicenter came online a little bit later, but there just wasn't the resource. I really used Reddit a lot, and there's been complaints, over the last 3, 4, 5 years about the social engineering on Reddit, and so you've always got to be careful about the information that you take in. Look, we just don't take anything for granted, Graham and I. That if we hear something, we always go down to the base level and really try and understand the fundamentals.
Yeah, and I think that's one of the hardest, I'd agree, is the hardest thing is there's so much information out there that some of it can be poorly informed, sensationalist, and you have to go really back to the source to find out, and also taking different angles on it and different arguments to make your mind up on what you think is the right way forward. Because a lot of people try and bend and turn this in their own direction. Graham, is so your background, so it goes way back to school. What about professionally? Do you have a similar background to James, or very different?
Okay, yeah. So we've got very, very different different histories, myself and James. I graduated from Nottingham University, and as most graduates do, I went and set up a poker business. I was an avid poker player through school and through university, and set up a business importing poker products from China. And yeah, so literally 2 days after finishing uni, an 18-wheeler turned up at my parents' house with all this poker equipment. So that was the goal from there. After about a year and a half of sort of scratching a living, to be honest, on a website that had no SEO, and were surprised that people weren't just flocking to this new flush poker empire that I was planning on creating. I thought it was time to actually go up to the city and actually try and make something of my life. So I literally one day Googled financial sales London. My dad growing up had always been, "Oh, you'd be great at sales, son." I couldn't think of anything worse at the time, but needs must. I'm a year and a half out of university and broke and living at home. So I was actually fortunate enough to come across a company that I ended up spending 10 years at, called World First. And I joined what was a team of 30 people in basically a house in Battersea on a residential street. And the business model was really simple. It was an international payments and FX business. We were helping businesses trade internationally at a cheaper price than the bank was going to do. That was the business model. My role, believe it or not, cold calling. So I had to call 150 to 200 people a day relentlessly every single day for what turned out to be 2 years. And, it really does sort of make the man. And I look back on that time now as, it's definitely one of the toughest periods of my life. But I think doing that job day in, day out and sort of having to mentally overcome and basically convince someone on the phone from, having no knowledge of your company to then transferring millions of pounds to you, I think is a skill set that you can take anywhere. And I was fortunate enough to rise through the ranks. I became the chief commercial officer. And the company started growing pretty rapidly. We opened 6 offices internationally. We grew to 800 people and have most recently just been acquired by Ant Financial. So it was a great career. I thoroughly enjoyed it. I learned a huge amount about how to grow a business. It had great leadership. But I also started to uncover some of the failures of this existing payment infrastructure. We were sending payments to China. The payment would go through 3 different banks. It might take 2 or 3 days to arrive, and we're charging people, a decent fee for doing that. In the background, I think it was in 2014, James sat me down and said, look, you've really got to start buying some of this Bitcoin thing. I've been researching. I really think it's the future, and it's really important that you start buying it. He in the past has had a few futuristic visions that have turned out to come true. The Canvas one is obviously one. Facebook is another one in terms of he's never and is never on social media. He called the Facebook scandal about 12 years ago when he thought that the data would be leaked and sold to the hard sort of political bidder, and there's this other thing. So I took him seriously and I started sending him and thought nothing else of it. It's not the classic sort of rabbit hole story where I then dive down. It wasn't real to me, and it was this ethereal thing that I couldn't quite get my head around. Until I was in Singapore at the end of 2016, I believe it was, and I met a company that our business had actually partnered with, and it was a great business. They'd done a huge amount in 9 months, and had this platform that was built entirely on the Ethereum blockchain. And for me, that was the turning point where this was now a real thing that was being utilized by real companies, and it was giving them an edge in a space that I was in, which was a fairly traditional sort of financial space. And so that's when the journey really started for me, that I came back and started diving into it, started investing at that point pretty aggressively, and really looking at what other projects, what other opportunities were out there. And a series of events sort of happened in sort of relatively quick succession where, I'm investing in projects that are, completely decentralized fiat and crypto exchange layers that promise sort of almost instant settlement and very close to zero cost for transactions. And, on the one hand, I'm working for an international payments business that is utilizing infrastructure that is nowhere near those outcomes. And another thing happened was, I had my 10-year anniversary dinner where when you sit down and sort of look the owners in the eye and you're 34 years old and you've been at the same company for 10 years, there's a certain alarm bell that says maybe this is the time. And I've always had the desire to run my own company. So these 3 things combined to actually make the decision pretty easy. And at the start of 2018, I resigned to work on this business with James.
Excellent! Right at the beginning of the crash. So
exactly.
Perfect timing to quit your job, wasn't it?
Exactly. Yeah. Last year was really fun. Really fun.
Yeah. Did you quit and then sort of 3 months later beg for your job back, or was your conviction still strong?
Actually, to be honest, the crash happening was a blessing in disguise for us, because at that point we knew this was a real thing. And, we knew that it was going to take some time for us to get established and get set up. So we remained very confident. And for us, in our eyes, it was kind of like, well, our competition's probably going to be getting blown out of the water on this. Because, all the funds that had come into the space had come in at the back end of 2017. There's nothing really there. And it was a blessing in disguise. We were working out of each other's houses at the time, but our convictions were there, and yeah, for us it was okay.
Were you guys always clear what your thing was going to be?
Well, but that
yes
I mean,
and no.
yeah. So, it's quite funny because it wasn't just Graham who I told to buy Bitcoin. It was basically every single person I knew, and he was the only one stupid enough to listen to me, or wise enough, I guess, in the end. But by the time that Bitcoin broke through its old all-time high in early 2017, it was starting to gain prominence again in the media. It was back on people's radars, and of course, I was James, the weirdo Bitcoin guy who'd been shouting about it from the rooftop, and just got an influx of messages over WhatsApp and emails of like, how do I get into this space? So Graham and I spent a lot of 2017 helping our friends, get onboarded, signing up to exchanges, sorting out their hardware wallets and whatnot, and basically advising them on what we saw as the good projects in the space. Those that were truly decentralized, that had longevity and a real growth potential. And so we were kind of just managing a lot of people's kind of investment decisions, so to speak, informally. But it was really, really enjoyable. And he and I just discussed over the course of the year that it was something that we could actually make happen. And so I quit in December 2017. Graham, you quit in early 2018, I think January, February. So we just knew we wanted to do something in crypto. Whether that was going to be setting up an investment company or not, we weren't sure. But everything kind of just fell onto our lap.
Yeah.
Okay. And so how do you make that step then? So you made the decision. What's the next step, and how do you come up with, as you sort of termed it earlier, these thematic investment concepts, if that's the right way to call them? And do you want to take us through them and just give us a view of how you see the world, how you see Bitcoin, and how you see these themes kind of playing out?
Sure. Just before we jump into that, I'll just give you the brief synopsis of sort of how you go from making that decision to set up a fund to actually sort of setting up the fund, and then we'll cover the thesis part. I think it's fair to say, we massively underestimated the process, the duration, and the cost of actually setting this vehicle up. And it's one of these where it's ironic in a sense, because we are utilizing old financial infrastructure to create a vehicle to invest in new financial infrastructure, in essence. And those two worlds don't mix very well. So, from a standing start to work out, first of all, what are all the pieces that need to be put into this structure, from banking to administration to regulation, to custody, to all these operational elements that you need to piece together. And that process was pretty arduous, to be honest. And I guess the sort of notable challenges around banking, and I think a lot of people have spoken about this in this space, that they're getting banks that are willing to bank a crypto fund is pretty challenging. Finding an administrator that actually understands digital assets, again, was pretty challenging. And shout out to a company called Vauban, that's our administrators, that did a fantastic job in really committing their business to this space and helped us along the way. But that process took about 8 months in terms of the sort of operational infrastructure piece to get right and get to a point where we're really comfortable with it. So I'll let James cover the thesis part. But yeah, it's quite
interesting because there's clearly a load of risks and challenges for what you guys are actually taking on at the end of it.
Yeah, exactly. And I understand it. I can't, coming from an FX and payments background, number one is sort of AML, like anti-money laundering, know your customer requirements, and they're pretty black and white. And so if you come out that you're a fund, and part of your fund might be investing in privacy coins. What's a privacy coin? Well, it's a coin where you can't check where it's come from, in essence, which directly contradicts what a lot of banks have as their baseline requirements. So it requires sort of forward-thinking organizations that want to be part of this space to
Sorry, guys, that's a fire alarm at my place.
Is that the SEC or the FCA?
They're on to us.
Good.
Okay.
I knew we should have done this podcast.
We should leave that in.
Yeah.
Okay, so James has been raided, but Graham, are you still with us?
I'm here.
Okay, so feel free to continue.
Yeah, I mean that was it really. I think it's just worth saying that the journey to set up a fund in this space is not an easy one, and I'm not saying that to dissuade sort of future competitors. I'm saying that just as from honest experience, it was quite a long process, and you've really got to find the right service providers. And I'm really pleased with the setup we have, but it took a while to get there.
Yeah, I just remember that towards the kind of back end of summer, and we aim to launch in October. I'll come back to that in a sec, but just remember we were at Mindgram and just looked at each other and were like, if we knew what this journey would entail, I doubt we would have ever embarked upon it, because it was grueling. It was, and so many times we just thought it was over. There were so many hurdles, so many obstacles to overcome. We were really forging a path that hadn't been kind of plowed, that hadn't been plowed before. And I know there are funds out there, but there's not a playbook to do this by. So it was an interesting experience. But this October thing, the aim was to launch in October, and we were watching really carefully, the market structure, particularly Bitcoin, and I think it's referred to as this big meme triangle, but basically the correction from earlier on in that year all the way to October. And Bitcoin was going to have to make a decision, and it was at 6K, and it was either going to go up or down. And, it kind of crashed through that 6K barrier. And it was at that point that we could just take a step back, breathe a bit of air, and we recognized that we've got a bit more time now. This bear market is nowhere near finished. We can really kind of hone our kind of proposition, our instrument. And so actually we didn't end up launching until February, which was a very good time to launch.
Okay. So actually you entered it. So you had the opportunity really to enter in October, and you made the concerted decision not to, based on which way the market went.
Yeah.
Smart move. So why don't you? So the so let's, now that we've kind of gone through the journey, I feel kind of exhausted listening to that. It sounds like you guys really went through it.
Yeah, don't set up a fund.
Yeah, but let's put some energy back in. So take us through the theory. What is it that gives ID theory the edge over others, and what is it that you see that makes you more likely to outperform others?
So I think it's actually really kind of understanding what it means to be decentralized. And it's not just about slapping a blockchain onto anything. So we kind of use our history of investing in personally in a lot of these projects. We've really been able to kind of slice through the noise, identify the scams, and we understand what's going to work as a decentralized network moving forward. The space is full of narratives, and for anyone who hasn't, I'd really recommend looking at Nathaniel Whitmore's materials. He actually tracks narratives, but when I first started back in 2013, it was all about money for the internet, and then we had the initial wave of altcoins, which were basically Bitcoin clones with a few characteristic changes or parameters altered. And then, it became blockchain, not Bitcoin. And this is when the institutions started getting really interested. And there were corporate endeavors to build out blockchain into their enterprise. And then it was Bitcoin again was the big thing. And then after that, it was the fat protocol thesis, whereby all the value that was being created by all of these projects would trickle down into the base layer protocols. And then, last year was back to Bitcoin again, it being the sound hard money. I think for us, it's about being ahead of this narrative curve. It's, being able to identify the opportunities way off on the horizon and having the vision and the wherewithal to understand the direction that the space is going in. There's been noticeable maturation in the space, since from when we first started. But I think being involved from the embryonic times, me personally, I've been a victim of 3 different exchange hacks. These are things that allow you to recognize where the risks are in the space. And, what we want to do is really insulate our investors from the risk, but also open up the opportunity. So, we touched on our thematic investment piece. Just, thinking about these narratives, it's been very interesting. I mean, there are real kind of chasms in the community here. And in fact, you see that it's very much split into two camps. We've got the money crypto hypothesis people on the one side, and then we've got like the tech crypto hypothesis people on the other side. And they're always sparring with each other as to where the best opportunity is. So to break those out, the money crypto hypothesis is that, there's going to be a winning asset in the class if this is about kind of creating a store of value. And, you on your podcast, you've interviewed some really inspirational people who understand that. But their argument is that there's only going to be one asset that wins. It needs to be self-sovereign, censorship resistant, scarce and secure, and that Bitcoin fits the bill. That's true. Bitcoin does fit that bill. And for a store of value, we do think that it's going to be the ultimate winner there. But Bitcoin doesn't do everything. It does, for example, privacy really badly. Everyone thinks that Bitcoin is anonymous, and it's not. All of your transactions are there out on the ledger for everyone to see. So you going to buy a coffee, can it can show everyone else what you actually own in terms of Bitcoin. So we have a privacy focus within the fund on the money side, but it's not just about money. Money was definitely the first killer app of blockchain, but this tech crypto hypothesis is fascinating for us. And it draws inspiration really from the history of the internet, where we're going to have these decentralized networks. They're powered by these crypto assets or tokens, and they act as economic incentives that fuel the growth of these networks. And that we're going to see the creation of really innovative, decentralized applications and instruments that have never existed before. That we never really knew were possible, in the same way that before the internet, we didn't really know that social media was possible or Wikipedia. And so, we don't think that these two world views are necessarily mutually exclusive. So yes, these Bitcoin maximalists recognize how important hard money is, but they don't recognize that there is value generation in the growth of these decentralized networks outside of money, and that value will accrue into other areas in the ecosystem. But, the crypto tech maximalists probably fail to realize how important hard money actually is. So that brings us on to our theme. So our first theme is very much about money for the internet, but also with a slant towards privacy. Our second theme is, kind of distributed computing and base layer smart contract platforms, the foundation upon which all of these innovative new businesses and enterprise models are going to be created that can do things that were never before possible. And then we've got a third theme, which is kind of like the infrastructure layer, which is on top of all of these things, the interesting areas that are being built, stable coins, decentralized exchanges. These are instruments that allow anybody anywhere in the world to transact with anyone without any permission, without requiring the trust, without requiring counterparties. And so what we look to do for our investors is basically give them exposure to those, what we see as really three key growth areas.
Sorry, I was just going to jump really, really quickly, and I think I touched on it at the start as to what are we, and trying to put us into a box. Is it a hedge fund? Is it a venture fund? And how we refer to ourselves. And I said that we're sort of hybrid or crypto native, and the reason for that is we really split our structure and our strategy into sort of three things. So James was talking there about what are we investing in, our investment theory, but these are live assets, right? Crypto assets are essentially the reward as part of an incentive mechanism of that network. And so part of what we do is mobilize those assets to actually capitalize on the network rewards, to try and realize the true value of those assets directly. So participating in networks, staking the assets we have. And the third bit, and then I'll stop rambling on, But the third bit is just around, we've seen, 3 times this sort of 70 to 90% correction occur. And as investment managers, that's just not, you can't sit here as a long buy and hold strategy and just, stomach those kind of corrections for your investors. So we have a trading and risk management strategy that controls our exposure, driven really on a number of factors, but according to the cycle that we're in, and some of the network metrics as well. So it's those 3 elements that combine that really give us that kind of overall, I guess, multi-strategy approach to this space, which is kind of unique, we believe.
It's amazing to hear how it sort of laid out that simply, because one of the things that I was reflecting on is actually how accurate you can apply those kind of 2 themes to this space, and how important it is understanding those and the tipping balance over time between when one is more of a prime than the other. I guess my question would be for you guys is where do you see kind of the immediate future going? So where do you see the next sort of 12 to 18 to 24 months going from kind of that point between crypto as money or crypto as technology?
So I think for me, like, it's really important to realize where we're at, and we are right now building out the infrastructure here, and we've had many attempts at going straight to the application, and for various different reasons. Transaction finality, as an example, means that any application that's built, on Ethereum 1.0 at the moment is going to be slow. And as a user experience, that's going to prevent adoption. So our focus in terms of where we're investing is in building out this infrastructure. And, with the recognition that, it's these building blocks that are required to get these eventual use cases down the track. So 2019 has already been the year where a lot of these projects that ultimately raise a huge amount of money on white papers or an MVP are starting to actually deliver, and starting to actually have real world live projects, and and we've got a number of releases coming out this year. So really that's the theme of this year, it's starting to play out like that as well.
Yeah, and think this market is really cyclical, as Graham kind of alluded to. We've had these massive corrections. I remember, 2013. I think there was a 20x rise, a 70% correction. In 2014, it was a 10x rise and a 85% correction. And then, back end of 2017, it was a 22x rise and a 70% correction. We've had that correction. So where we're going now is, I think we're entering the start of the new cycle. So cycles are typically characterized by, accumulation. Then there's the bull market. Then you get this massive parabolic arm, which really doesn't last for very long, maybe only a few weeks. And then there's a bit of profit taking. And then there's a big bear market. And that's where you get the bleed down by like 80%. I think the next kind of 12 to 18 months, Stig, are going to be interesting. I think there's going to be a lot of growth. As Graham said, people have been building. They've been building a lot over the last 18 months, and we're really seeing the fruits of their labor start to emerge. We're seeing some really great decentralized financial instruments come out with the likes of MakerDAO, where anybody anywhere in the world can create their own loan without any permissions. That's crazy. We're seeing, I like to think of all of these decentralized instruments as, little Lego blocks that can be, they're all, in the words of kind of Joe Lubin, who's one of the founders of Ethereum, they're all in the same design space when it comes to, when you're looking at the Ethereum decentralized financial instruments. So these things can all connect together, and they don't just have value generation by themselves, but by connecting together, there's value generated in the synergy created between those connections. And I'm very much of the opinion that probably the next run is going to be epic, and it's really going to outshine the ones that have come before it, because crypto is now on people's radar, and everyone thought it was dead. And the next time we go through 20K, it's going to be all over the news again, and people are already kind of onboarded. They've got Coinbase on their phones, they can get money into the system, they can buy these assets really, really easily. And we're going to see a tipping point, really. So I guess the question is, is Bitcoin, and potentially other crypto assets, is it mature enough now that it is considered as a potential safe haven, as an area outside of the traditional financial system?
It's interesting you bring that up, because it's one of the topics that we're trying to get onto and have some real deep economic conversations throughout the series, and we do have ideally a couple of economists lined up. They are not fully confirmed yet, but the people that we're hoping to speak to, their view is that the big crash is coming. There is a gigantic debt-based bubble around the corner that is likely to be triggered by bonds, and it's not far away. And I think the challenge is, as you said then, James, are we heading for potentially an S-curve with Bitcoin, where there's a huge rise and it goes way past 20, maybe up to 100, maybe even further than that, who knows? Or is it more of a longer term cycle that is more mature and is more starting to align more with the traditional financial market cycles of 5-10 year bull market, bear market cycles? But I guess the challenge to all of that is, in an environment where the global economy collapses and there's a 2008 style, maybe even bigger crisis on our hands, will we see people taking money and risk off the table and Bitcoin collapse, or has it done enough in the last couple of years to prove itself as a safe haven, sort of alternative to gold?
Yeah, I mean, I think sort of from a sort of macroeconomic view, we're running on vapors, and it's widely talked about, but the dovish capitulation at the start of this year, if you just look at the sort of global interest rates and the sort of lack of room to move, consistent QE, national debt, US is at 22 trillion, Japan at 22% debt to GDP, I think it is. Globally, we're not in a good place, and I think the question with Bitcoin is like, at what point? I personally think in the next few years we're going to begin an inflationary recession, and at what point of maturity of Bitcoin will it actually stand the test at that point? I think at the start of this year I'd probably say it wasn't ready. I think there's been some positive movements, and there's smarter money getting into it. I think I also look at it from the perspective of what are the investable opportunities out there in the wider space, and we're at the end or close to the end of the longest equity bull run in history. Treasury yields are plummeting on sort of growth concerns. The fiat in your pocket is losing purchasing power by the day. So money has to go somewhere at the end of the day. And, the longer that Bitcoin is here, it's almost anti-fragile in that sense, that the stronger the case for it actually taking some of this adoption in that scenario increases. So, I'm confident. I think both of us wouldn't be doing this if we didn't think ultimately that, that was going to happen. It's just a question of timing and how this sort of macro environment plays out and when it plays out.
Yeah, and this is without a doubt, it is an emerging asset class, but it's rapidly growing. And today it's certainly, uncorrelated. So it offers great risk-adjusted returns. It is really small when you look at other asset classes. I think, but it has so much room to grow. And we've just been talking about market cycles. Now I think for people, it's a very attractive market entry, post-correction. And the upside potential is potentially asymmetric. When you look at the health of these networks, Graham talked about network metrics, and it's something that we look at very, very closely within ID theory. These networks are really healthy. The price might have been hit over the last 18 months, but the networks have gone from strength to strength. When you look at active addresses and on-chain value transfer, when you actually look at the momentum of these metrics, we can see that it's swinging in a kind of crazy upward direction. You can start applying some principles that you would to just market momentum. You can actually apply those to network momentum, and across the board we're seeing some really, really positive things. So when an investor is evaluating whether or not they should invest, from a kind of portfolio structure point of view, irrespective of your views on Bitcoin and its sustainability, it actually does warrant a place in any diversified portfolio. And there was a great piece by Wences Cesares, the CEO of Zappo, earlier in the year, where he was advocating a 1% allocation of Bitcoin to any traditional portfolio structure. Historically, that has led to significant and persistent outperformance in risk-weighted returns. The published literature is showing it as well. Any investor who believes Bitcoin is going to continue to do as well as it has done for the last 7 years or so, they should be allocating Bitcoin within their portfolio. So look, we're monitoring all of this really carefully. We're not, is it immune from a catastrophic economic downfall? It's still risky. But we do believe that over time, this is going to be considered a safe haven. I mean, after all, it was created in the wake of 2008 in a response to the financial crisis. And its size at the moment, I think Bitcoin's current market cap, 140 billion, total crypto, 250 billion. If you contrast that to gold, it's 2.4 trillion. So if people are going to recognize this as a bona fide store of value, a digital gold, so to speak, it's got a lot of room to grow. It's going to be fighting for $800 trillion worth of the value that exists within the global economy. And, with only 21 million individual units, you don't really need to be a mathematician to recognize the potential that exists there.
Yeah, great. And I read something, I think, about a week ago, maybe, it may have been from another fund manager that did some analysis. And over the last 12 months, I think, the average return from a portfolio of funds that he looked at was, I think it was around about 7.4 or 7.6%. And that was assuming that those funds didn't have any exposure to Bitcoin. I think they laid in some analysis which said if they'd have put 1% of their portfolio into Bitcoin, it would have risen to around about 9%. But if it had have in the same time period gone down to 0, the return would have been 7%. So for a 1% allocation, as you said, which has massive upside, the risk on the investment is incredibly low.
Yeah, and it's actually not just Bitcoin. When evaluating a basket of crypto assets, except for possibly a mild correlation with gold and crude oil, there isn't any significant relationship between returns on that basket of crypto assets and more traditional assets. Excellent. So it just makes sense to have it in your portfolio.
Okay, so we've kind of given a view of what the next 12 to 24 months look like. So if we were to look at the longer term, the much longer term, the kind of 10, 20 years time, what are your guys' views on this more as a theoretical concept and where it can go?
Yeah, so it's a really good question. I think it's so important to actually take this away from price. And I think given what's happened over the last couple of years, price has just been this sort of dominant factor. And it kind of obscures what's actually being built here, which I think is, incredibly important. So what we're really talking about and how I guess we see it is that this is about decentralization, but it's about decentralizing human control over computation. And what I mean by that is, we rely on the likes of Google and Facebook for our communication, for our data, and for every element of our digital existence, really. And that works fine for the most part. But we've had over the last 10 years numerous examples where that trust has been exploited in one of any number of ways. And so there has been this growing demand for ownership of your own data within that sphere. And what we're really building here, not ourselves, but what this space is really building is this decentralized computational stack. And it's quite an ethereal concept, and everyone talks around sort of Web 3.0. And I think what people miss is really what the benefits of this are, and how explosive this could be in the future when these building blocks are laid. So I think the first point to note is that this is all open source technology. So that means that the pace at which innovation can happen all over the globe with developers porting code that has already been built and shared and building on top of it, is astronomical. So the pace of change that we will see once these building blocks are in place is going to be huge. The other point is around these applications being able to talk to each other. So having composability within this decentralized stack, again, is going to accelerate the possibilities and the pace of innovation on top of these layers. And, all withstanding, you're eliminating entirely this inherent platform risk that we have at the moment. And if you think of the sort of Zingers and Facebook examples where, big businesses have been built on technology that changes their T's and C's, and then ultimately that business folds. So this gives confidence to that developer community that this is here for the long term, and with this open source and composability together, I think that the sort of explosion of innovation that we're going to see is going to be pretty astronomical. And
it's interesting because the day-to-day infrastructure, which we're all still working off, hasn't changed a huge amount since the massive rise in 2017. And,
exactly.
And what's going to be interesting is seeing how that base infrastructure, that base layer, starts to morph and change based on this new technology.
Yeah, exactly. And I think ultimately it's obfuscated away. You're not going to know necessarily that some of the things that you're interacting with are built on this technology, and that would be the win. The part of the challenge now is that you have to interact with in all these new ways that people are not used to, which is preventing adoption. But I always think of a kid in India with a smartphone in a year's time building an application that is completely censorship resistant, that doesn't cost anything to set up, and will it be in existence for forever essentially. It's pretty exciting when you start stacking those ideas on top of each other.
Yeah, I'd agree with you there, James. I think there was an article, interestingly, this week, I think, that stated, look, you've got to be careful of the blockchain hype, and there is definitely merit and smart contracts and the whole sort of decentralized future. There's a lot in there, but people probably won't talk about this in the future. It's there as a component of a technology stack and an organization to facilitate actions. Right? It's the same as saying, in 10 years' time, 10 years' time, people aren't going to go around saying we're a blockchain company, we have this blockchain capability and that blockchain capability. It's the same as saying today we're a PowerPoint company, we're an Excel company, we are, we've got a database. It's not going to be a thing in the future. It'll just be invisible and in the background.
Yeah, I totally agree. I think the other important thing just to say here is that everyone's trying to work out how they can sort of port existing applications that we know today onto a blockchain. The sort of social media EOS voice idea. It's not about that. It's not about that. It's about what applications can be created that can only be created as a result of this technological innovation. And it really boils down to what is this bottleneck in growth that trust has created, and where can we free that up to create new use cases. And for blockchain, the first area really that has got traction and is continuing to get traction is finance. And that makes sense because if Microsoft brought out Bitcoin, no one would use it. So it makes sense to start from there. But really, predicting what the sort of killer applications are beyond that is challenging, like predicting social media before the internet. So
just fundamentally, we believe that implementations of this technology are going to have far-reaching impacts on not only our economy but also society, and that's going to be transformative of a magnitude similar to the internet, if not more than the internet, actually. Where the internet was a big network of information, we've now got a network of trust where you can transfer value and data. And with all this abuse of trust that's happened, I think that the generational adoption of this technology is going to, really propel it into the future.
It's interesting to reflect, certainly from my perspective, reflecting on the last 2 to 3 years, but probably from your perspective, reflecting on the last 5 to 6, how the space has come on so much, but actually on the mainstream and the sort of realization of what you see day to day, it actually hasn't hasn't really changed or infiltrated that heavily at all. And it's then exciting to think what will happen when it does.
Yeah. I mean, look, a number of people sort of made this analogy to sort of, creating public markets out of sort of early stage VC, which is basically what has happened here. And, VC funds are 10 years. And, what we've got here is this sort of public expectation as a result of early price discovery in projects that never would have had, public investment at this stage. And so there's this expectation of like, well, there's no applications, there's no users, there's nothing there. And, you wouldn't expect there to be anything yet there, 2 years or 3 years into the creation of a tech startup. So price is, to be honest, a distraction for a lot of this, and certainly brought in the wrong types of people in 2017. The bear market has had a decent cleanse, and it is this old analogy that if we could go away for a year and a half in a sort of closed room and just freeze the markets for a while, obviously it wouldn't be great for our fund, but for actually getting the job done, I think that's what's required, and resetting expectations on this time frame.
Graham, do you remember when we were like 16 and we used to play Warcraft 2 together over the internet?
Sadly,
it was it was primitive. We had to dial in each other's IP numbers, but we were doing something then that has become the hugest industry. With all the esports and stuff. Back then, it was so obvious how the internet was going to change gaming. I think for Graham and I, it's very obvious about how blockchain is going to change the society that we live in, and we just look to position ourselves and our investors on the forefront of these kind of revolutionary moves that are going to be happening in the future.
Amazing. One thing that I wanted to touch on before we finish, because I know that either one or both of you have background and interest in genetics, and it's something we discussed briefly before the podcast started. Do you have a view that actually what we're kind of doing here is that Darwinian theory of blockchains, which one's going to survive, which ones will die, and by testing all of these different features, incentive mechanisms, and components, and we're kind of in that early discovery phase. What are your views?
Yeah, so my background is genetics, and particularly kind of complex systems. These decentralized networks, we see as kind of species that are subject to Darwinian mechanics. So this week we're publishing our thought piece, which outlines how the future will emerge, and then through the lens of biology, how that informs our where the greatest investment opportunities are, I guess. And look, your podcast bills itself as an on-ramp for newbies to the space, and wants to outline how the ecosystem will emerge and how projects will evolve. Well, that's very fitting with what we're about to publish. There's loads of great thought pieces about evolution in the blockchain space. You've got Crypto and Grill alumni Dan Held, who was on recently. He's done a wonderful piece looking at Bitcoin as a form of life and comparing it to other types of money and touching on genetics, and more recently Tom Shaughnessy's work. But we look to take that all a step further. And these concepts, they're not new. Evolution in blockchain, it's not new. They came to prominence really around the release of the Tezos white paper back in 2014. And for your listeners who don't know, Tezos is a kind of evolving and self-amending blockchain. But, this is something we've been thinking about now for a very long time. And we've identified undeniable parallels between evolution in biology and the evolution of these decentralized networks and their underlying technology. And so we're really excited to get the piece out. I mean, small plug, you'll be able to find it on our new website, which is idtheory.io. And by the time this podcast comes live, it's going to be up. So I think, the conclusion from that piece is that, and to tie it back to ID theory, ID stands for incentive design. So we've talked a couple of times during the podcast about the crypto assets are part of the incentive mechanisms of of these decentralized networks, they reward people for contributing and participating in the networks, and they act as basically network access tokens. But these incentive mechanisms are analogous to, in nature, growth factors. And so those decentralized networks that have the best incentive design are the ones that ultimately are going to have the highest growth rates and the most proliferation of those networks. So, it is a complicated piece. I mean, it's trying to teach people a bit of biology and a bit of blockchain at the same time. But, we're looking forward to getting it out there, and it genuinely has defined our investment thesis.
Super exciting. Guys, we're nearing the end. It's been amazing having you on. Just before we sort of head into our traditional exit, what does the next 6 to 12 months look like for you and for ID Theory?
So we're actually, this podcast actually marks us coming out of stealth mode. So we've been onboarding our network into the fund, building out the infrastructure, building out the team, and that's now all complete. So the next phase is actually getting out there a little bit more publicly. We're traveling a lot, going to events, we're spending time with projects, and a big part of what we try and do all the while is try and educate people, whether they're investors or not, as to what this space is about. And we've recently just come back from the BVI, where we were talking at a school, and we were talking in Istanbul at a YPO event as well, just trying to put the word out there as much as possible. So lots more of that.
Awesome. So to take us through to our close then, this is the Crypto and Grill podcast. You guys, let's fast forward into the future. You're going to celebrate your 12-month successful launch. Bitcoin has gone to the moon. You've invited SEC, FCA, any other hostile regulators and other parties that you might want to schmooze and keep on good terms to your newly launched offices in the city for a rooftop barbecue. What are you going to put on the barbecue and the grill to keep those people happy? You can have one choice of item each.
I'm going to put a whale on there.
A whale.
I mean, come on, they're so important within this space. So we've got to recognise, the whales, for good or bad. Let's eat them up.
Whale.
They've been feeding on us. It's time for us to feed on them.
Yeah, I feel the animal protection crew is going to be up to you, Jim, with that one.
This is going to be a blacklisted podcast, I think, after that one.
What
goes with a whale, Graham? What goes with a whale, Graham?
I mean, the obvious thing is lobster. Let's get some crustaceans on there. Let's really celebrate.
Okay.
Seafood dinner it is.
Brilliant. Look, guys, I think that about wraps us up for today. Thank you for your time. Best of luck over the next 12 months. And I'm
awesome.
Sure, hopefully it goes well.
Thanks very much.
Nice one, guys. Thanks a lot. Appreciate it.
If you're listening to this, you are the resistance.